Okay, welcome everybody. My name is Chris Salem. I'm going to be your host. Hope everybody is having a great start to your week. I am so excited to be part of today's session. We have a wonderful event planned for you today here for this webinar on locking big retail revenue with AI. So exciting, smarter decisions, scaled impact. And in this session, you're going to uncover how AI, artificial intelligence, is helping to drive smarter decisions, higher sales, and lasting customer loyalty. And as I've always said, AI is an imperative. It's a tool that when we can use it correctly, we can do so many great things with it. So I am so excited here today. So we wanted to make sure that before we start and we introduce our subject matter expert that will be sharing insights for you today, just wanted to take some housekeeping items. There is a chat box open to the right. We want to make sure if you have any questions, feel free to put any questions or any comments there. I will be moderating that and just making sure to let our subject matter expert know about this so we can address those questions. And we're going to leave 10 to 12 minutes in terms of your questions that we'll make sure to answer. Okay, so a little bit of information before we start. So we're going to be talking with today with Todd James, and Todd is the founder and CEO of Aurora Insights. He is the ex-chief data and technology officer of 84.51. That is a Kroger Retail Media and Insights subsidiary. And what Todd does, his firm does, is help companies, executive teams, and boards harness artificial intelligence and emerging technologies to create sustainable enterprise value. Now, he's a former Kroger executive. Todd was accountable for the company's enterprise-wide AI strategy as Chief Data and Technology Officer of 84.51, as I mentioned earlier. Again, that was Kroger's Retail Media Insights subsidiary. And he integrated AI into all their core business decisions, scaled adoption across the enterprise, and drove the monetization of data assets. He previously spent 15 years at Fidelity Investments, leading global analytics and business transformation, following earlier at Deloitte, and service as officer in the U.S. Coast Guard. And we are so excited to have Todd here today. And Todd, the stage is all yours. And again, everybody, we want to make sure you put those questions in the chat box. I will be looking at them throughout, and we'll make sure we're going to get everybody answered before today's webinar concludes. Todd, the stage is all yours.
Thank you, Chris. Appreciate everyone being here, and thank you to Zoolatech for sponsoring this event. So let me pull up and some slides and get us started. All right, so today, as Chris indicated, we're going to do some coverage of what's happening in retail from a artificial intelligence perspective. And as mentioned, I'll walk you through some observations. So just to start the day, a couple of things. The focus that we're going to talk about is really going to be around not just artificial intelligence from a technical perspective, but we really want to anchor on what does it mean around business value and how do you enable it? Moving beyond pilots to scalable solutions with a very specific lens around the retail environment. So by way of introduction, we already had one, but as Chris indicated, I recently founded Aurora Insights. Prior to that, I was Chief Data and Technology Officer at 8451. I also led enterprise data and artificial intelligence for the Kroger company, so kind of a dual role, which gave me access to a great set of resources. Prior to that, Fidelity Investments, where I helped build out artificial intelligence for the retirement and healthcare businesses. And when I left, I was leading all the cross-enterprise AI. But my career has been one where it's been at the crossroads of business technology and P&L and operating roles as well as technology roles. So what you're going to hear throughout this discussion is me bringing that lens of data to enable analytics and technology at the service of the business. If you're interested in what I say, I encourage you to follow me on LinkedIn. I publish a lot on these subjects. In fact, I have an article I submitted yesterday on retail that I will be sure to, in AI, that'll be sure to post, but feel free to follow me. And just to give you some quick insights, I left Kroger to start a company that is really anchored on helping executives, boards, and companies make AI real, not theoretical. I saw the disparity between those that were really pulling ahead, and we'll talk about leaders versus laggards today, and those that were not. And the focus of this company is really on driving business value, velocity, and confidence. And our work begins where I would like to say most efforts stall, either in getting started or helping organizations move from pilot to scale, from experiments to real enterprise value that shows up as EBITDA in the financial statements. So if one other thing too, the website's on there. It's aurorainsightsllc.com. I will cite some sources today. Anywhere where I'm mentioning Kroger, it's public knowledge, and it is published in those articles. So if you're interested, you can go back and look at them later. So let's talk a little bit about what we're going to discuss today. So first, what's really happening in AI? I want to talk about where it's impacting retail, but also kind of the state of the industry. Like, are we really getting value from it? Two, if you want to get value, how do you get scale? I've seen some common themes across both when I worked in financial services as well as when I worked in retail. Scale, when you think about operations, you think about process, you think about technology, and you think about people. All of those need to come together to really establish what I'm calling a new layer of algorithmic infrastructure, a different way of working that is absolutely essential to going from projects that drive some tactical value to business model change, new product offerings, and material change to your economics as a company. And finally, we're gonna span out about 3 years. If all these things are true, what's possible of retail? What could it mean for us? And obviously, the quote here that we have, I think one of the things we have to keep in mind: the stuff's changing quick. Our ability to build infrastructure, to build models that are flexible, and to work with a workforce and help them become resilient and flexible is going to be key to the success of all companies and organizations moving forward. So let's talk a little bit about the retail reality. With the header there, everyone's like, no kidding, Todd. I know that, I live in retail. But just to give you a sense, you talk to most executives in the industry, they're saying that, look, we're under significant pressure to protect margins. From what's happening with, for those of you impacted by tariffs and some of the changes there and supply chain shifts, that's very material. But also we're seeing changes in buyer habits and behaviors, which we'll talk about here in a minute, that if I can press the right button, that are driving that. So, margins under pressure. I think the second thing from an industry that we're really seeing is growth constrained. If you look back at August, some of the financial data that was released there, we're seeing about a 5% year over year consumer retail sales up. But when you account for inflationary factors, that was only about 1% in real growth. And I think those of you that are in retail are probably very accustomed to seeing things such as revenue per basket up, items per basket down. So seeing some of the price action really driving that growth as opposed to people actually buying more in a lot of cases. And then consumer expectations are rising. And what I would say here, you see the stat, yeah, we know consumers ignore irrelevant marketing, and personalization does create, and we'll talk about this, a lift we like to be treated in a way that makes us unique and relevant and have experiences that simplify our customer journey. I think the thing about retail too, we got to keep in mind is our customer expectations are not just changing based on what we're doing, what our competitors are doing in retail, but it's through every single digital experience that these customers are having where they are resetting their expectations, whether it's in the retail industry or not. So that's a story, I'll say it twice in this deck, that's a story of not just velocity, but of acceleration. So what's really happening in retail AI? So, the good news, 70% of retail and consumer companies are using AI, and that's up from 47% in 2022. So, that sounds great. I was talking to someone recently. I said, well, 70% are doing it. I guess we're finished. Everything's fine. That's not the complete story, and we'll talk about some of the hidden signals as we get a little bit deeper into the webinar. But the fact that companies are leaning in, that is a material data signal. Executives, a lot of them planning to maintain or increase AI in the next fiscal year. I've had some discussions recently, and both by my past experience, but also what I'm seeing and reading in the market. A lot of the way that's going, some companies are carving out particular investment funds, but a lot of this is really about reprioritizing from investments that in legacy ways of doing work. Once organizations are able to see that with a well-manufactured set of AI capabilities, there's a lever that allows you to move quicker, to drive value quicker, and to de-risk some of the larger technology programs. So we're seeing a reallocation of funding out of other technology initiatives and in some cases out of other business initiatives. Sales are going to continue to grow in retail based on projections. How that grows, and we'll talk about it in personalization. I was give me a little bit of grace on this quote here. I was doing my early morning workout, and the stat, I think it was a gentleman from Morgan Stanley, but the data comes from Moody's, also going back to Q2. About 10% of income distribution accounted for about 40% of consumer spending. So that does mean that there is a little bit of variation as we look at retail sales growth, what audiences that's growing with, how we target, how we engage across the broad set of buyers is going to be very important. AI and data are a tool for that. The reason I bring it up, though, it's not, you have a disparity in terms of how you're seeing consumption patterns across, at least across the U.S. consumer. And AI is reshaping retail from the value chain. So end to end, we'll talk a bit about that. So retail, built for AI. I think as I mentioned, right, I came out of financial services, some different industries before that, but talking roughly 15 years at Fidelity Investments, and why leave a good job to go over and test yourself and try something new in retail. And there are reasons to do that. But one of my observations coming in is retail really is built for AI, and that's true across several different vectors. One is the massive data at scale. This stat here, we know it, but this stat is attributable to Capital One. Thank you if you're on the call. But retail generates more data per dollar of revenue than any other industry. We see that when I talk massive data, and once again, anytime I mention anything Kroger publicly available, that's about 10 petabytes of customer data that sits there, and the other retailers have similar scale assets. You just don't see that across a lot of other industries. And keep in mind, 1 petabyte is enough to render the Avatar movie. So these are massive amounts of data. 2, high velocity decisions. What I would say there is the pace. You look at the financial services industry, you're working there, you have people hitting your website a couple times a month, maybe once a year, because you're looking at your investments. You really don't want a daily pattern of behavior on your app when you're in financial services and people are looking at their investments. You want them there for moments that matter. But I tell you what, I need milk. I especially need coffee every day from time to time. And there's a piece of furniture I want, or a we're always on those apps, and the velocity of interactions across those data is huge. And one thing, I had a meeting recently. I was meeting with industrial chemical, multi-billion-dollar global out of Asia industrial chemical company, and talking to their leadership team. And one of the things I kind of slipped as I was talking to them, I said, look, if you're looking for where to find AI opportunities, there's no magic to it. Where do you have big groups of customers or big groups of people making lots of decisions, and you have data to support? That's usually a pretty good place to intervene with AI. Luckily, they kept talking and paid me, so that was good. But I think the moral of the story there is retail, once again, around the velocity of decisions, the constant customer contact, and then the pressure of low margins and high stakes. And the bit of storytelling I'll get here is when I started at Kroger, I had one of my first meetings, or not first meetings, it was right before the first holiday. I was in talking to the CEO at the time, and he asked me, he said, Todd, what's different between financial services and retail? And I said, in financial services, especially coming out of a private company, you really have an opportunity to think longer term, to be very strategic, to think about how you might try some things that could redefine an industry, right? They didn't start making money on 401ks out of the gate. It took time, years, decade, before that started hitting. You can make those kind of bets. But in retail, I told them, you have to hide your strategy and tactics. When you're dealing with low margins, a couple of mistakes can really impact a business's ability to perform. So it is an environment that I like to say constraints breed creativity. And I think there is a tremendous amount of creativity in the retail space. So its complexity is its advantage. So how are leading retailers winning at AI? We're going to get into each of these a little bit deeper, but the answer is everywhere. Smarter decisions, scaled impact, real results is how I like to think about it. But as we talk about this opportunity, AI is no longer theoretical in retail. It hasn't been for a while. It's reshaping how leaders grow. Those that aren't engaging are going to be left behind. What you see is the emergence of a interconnected AI value engine, which we'll get to deeper in my theme of scale, deeper into the presentation. So this slide, I know it's horrible, and it beckons back to my days as a management consultant where I was 100% convinced I was paid by the slide and the number of words on the slide. That's a joke if you're a consultant, but the reason I put this up here, it's actually a horrible slide, but the reason I put it up here is for effect. If you walk the top of the slide, you basically see the value stream for stores. Underneath, you see a selection of potential use cases. And what you determine right away is because of the structure of grocery retail across the entire value stream, there is tremendous opportunity. But if you go to the very bottom of the slide, unified data thread, without having the ability to extract, enrich, and optimize that data set, you forfeit the opportunity to take advantage of what is a very rich environment for transforming a business function, transforming a business through the use of data activated at scale through analytics. All right, so let's walk through a few examples. As I've been telling people for years, when I think of personalization and from the early days in financial services and then moving into retail, relevance drives revenue. The closer you connect to intent, the greater the return. And let me kind of walk you through, So let me walk you through here. What we're going to do is we're going to take a quick journey through the customer journey as we go through. So envision, we have an individual here. She gets on her app and she receives a marketing communication. From her perspective, this is good because the marketing communication is personalized to her based on her customer loyalty number. And what they're able to do is make her life easier by providing her with relevant opportunities. Because it's personalized, because it's relevant, she's more likely to click on the ad. And if she clicks on the ad and begins the shopping journey, the revenue goes up. Now we go into the online shopping journey. And what I'm talking through is every single data point along this journey provides an opportunity for an intervention for the good of the customer and for the benefit of the retailer to be able to create a more seamless experience. So here, get on board. Based on past experiences, we know that this individual at this point has a set of preferences that she buys all the time. If the science is advanced enough, we may be able to make some predictions that say chances are she's running low on this and not on that, and to be able to create an opportunity to build the basket. That does several things. One, if you're doing it well, the cart build time, customer experience goes down. I've seen organizations where that drops by roughly 4x if you're really doing it well from start to finish as you add personalized sciences. But you're also driving up items per basket. Relevant items that this customer wants, but items per basket from a store perspective. Then we get into the shopping journey and we're looking for something and we start to search. The ability to incorporate semantic search really does improve results. And to give you an example, if you think back to some of the naive search capabilities, I'm looking for a strawberry. Strawberries aren't in inventory. I do a search and it returns within that things like strawberry air freshener, strawberry candles. Semantic search, these new search capabilities, understand the context and realize that you're looking for spreadable fruit. And if you know me, you're going to recommend orange marmalade. It is the best. But you're going to go through that kind of contextual search that prize. And what does that do? It reduces your instance of no search. If you return a search and say we don't have the item, you don't get the sale. But if you can return something relevant, you have an opportunity. So you're increasing sales and items to basket. Substitutions, right? We don't have an item in stock. We want to recommend an alternative, increasing your substitution rate and also recapturing potential sales that if that item isn't there and you're not providing something that they accept, they're not going to buy. And then at basket completion, being able to look across that basket, being able to look at the audience of the individual that is actually doing the buying, and either recommending one of two things, realizing you left something out for your Thanksgiving dinner and recommending a cranberry sauce, which adds an item to basket and a recaptured sale, or repositioning new items that this customer has a propensity to buy and be interested in that they may not have seen in the past. But the moral of the story is across this customer journey, at every single step, you have an opportunity to intervene with data and analytics in a way that is mutually beneficial to both the customer and the retailer. And we'll talk about this on the other side, but if you are guiding a customer through a shopping journey that's digital, a lot of organizations are starting to look in terms of retail media and other alternative profit levers that provide the opportunity to give brands access to that journey based on products that are relevant to that customer and to be able to expose them through advertising. We'll talk a lot more about that alternative way of, new profit centers. So let's talk about driving profit through precision. So, another example that we're seeing AI across the retail space right now is really through pricing levers. And what I would say there is, one, we have the ability to do dynamic pricing. And this is where you're fine-tuning prices in real time to balance margin and competitiveness. And let me just give you an example. Say you have 10 products across 4 weeks with 5 price points per week. You're going to do a little math experiment. See if you can do it in your head. You won't be able to. I can't. And you'll understand when we get to the answer. But say you have 10. So in that case, you have 10 products for 4 weeks, which equals 40 product week combinations. For each of those products, you can choose one of 5 price points. Therefore, you have a total of 5 to the power of 40 price combinations. Which one's right? Our merchandisers, that is too much math for them. It's too much math for any of us. But through these advanced pricing engines, you're able to have the power of being able to sort through that many combinations to be able to provide optimized pricing. Promotion optimization. This is another one. It ensures that every offer drives incremental sales, not just volume shifts. Right? You don't want to offer a promotion in one place and have them take that instead of another buy. What you're trying to do is offer them something unique that goes above and beyond and adds to basket. And then another tool that we're seeing is markdown management, which is using data to be able to clear inventory proactively instead of reactively. And that has a very large impact on downstream things such as shrink waste products that expire and can no longer be used. So what we're seeing here is this creates a continuous pricing intelligence loop that lists both revenue and margin. One of the things we'll talk about here is when I talk about acceleration for leading companies, if you have a pricing model and optimization, yeah, that's good. You have a promotion model and optimization, that's good. But what if you can optimize across the top of those? That's where you start to see nonlinear benefit. And that's where we're seeing, when I say, and we'll talk about it later, leaders are accelerating ahead of the pack and moving faster from those that aren't leading in. All right, so a lot of companies, a lot of organizations, it's not uncommon to see in retail AI that starts with merchandising marketing. A lot of these retail organizations tend to be sales, merchandising led in terms of mindset. You also saw a lot of the early consultancies focus and specialize in those spaces. So you see science is more mature in the merchandising marketing space at a lot of these retailers. But when you're operating with relatively low margins and you can apply science that goes straight to the bottom line, there is a tremendous opportunity from an economic perspective, from a flexibility perspective, and from a emissions perspective to use data activated by science to really impact your operations and your supply chains. And across that, you have to think differently, right? At the core of this, it's not just operations. Underlying all of it is this concept of a unified data thread. So we're going to talk about two examples here. One, let's talk a little bit about supply chain. So optimize routing and inventory, right? So we have the ability to cut waste. And one example that I will give you, and you can read about it, you go to the website and look, this is an example that we did at Kroger, but the challenge we were looking at is how do we provide more flexibility in the supply chain and be able to look at it. So in this instance, what we were able to do is use advanced routing algorithms to route trucks from DCs to stores. And the net there was about an 8.63 reduction. That's the last published value. So what I would say there, though, is through this optimized routing, you're providing flexibility in your supply chain, you're reducing your costs, you're reducing emissions, which, depending on how you want to think about your product offerings and whether you have carbon neutral product offerings or anything, can contribute to potential revenue growth outside. So routing and optimization, and you can think across an entire store operation, entire retail operation. You route a lot of things. You route trucks from DCs, you route people around stores, you route people in warehouses, you route trucks from brands to distribution centers. So there's a lot of places that if you're thinking about scale, you can build these algorithmic solutions. Sustainable and flexible networks, talking about network rebalancing and continuing to identify that you've got the right product and the right SKUs in the right locations based on demand patterns in the stores in a particular area. And faster deployment. Modular AI models scale innovation across markets. One of the beauties around operations is if you're building your artificial intelligence with an eye to scale. I gave you the routing example. There are a lot of places you can route. What you're trying to do from a technical perspective to support the business is build that in a way that your routing capabilities, either the engineering patterns, what you learn from the mathematics, you run different data through it, so you can't just plug and play in most cases. And then what you're doing on the operations side to increase the speed to market for new sciences in your operations chain and reduce the unit costs associated with deploying those models. Operations. So, AI-powered e-commerce fulfillment. An example, once again, you can go read about it. It is cited, but one of the challenges that I had in my last role is we were looking at how do we improve the customer experience by reducing the amount of lead time for a pickup order. You order, someone's got to run around the store and pick it up. And a key part of that solution was we determined that if you reduce the distance traveled by an associate in a store, that you can provide flexibility and reduce the lead time for an order. So, we're talking solutions that calculated, 200,000 totes per second, 10% reduction across across 2,500 stores, which led to about a 33% reduction, created the operational flexibility to reduce the lead time by about an hour. So the reason I bring this example up is because you're talking about going from millions of route calculations to hundreds of billions, and being able to optimize and select across those at a pace and speed that has not been previously possible. 200,000 calculations a second each store. So keep that scale in mind. Performance insights. You know, what I'll say here is one of the example I like to give is if you look across all of your retail outlets and you're able to take your 10% worst performing stores and get them to the mean, what does that mean economically? And the reason I bring that up, to be able to do that, the ability to have a data infrastructure that de-averages a lot of your operational metrics and gives you real insight into what's happening at a store, a department level, and even sometimes down to within hours and shifts and days, provides greater flexibility and opportunity to act. And I go back to that point. If you could raise the bottom 10% performing stores to the mean, what does it mean economically? And for retailers operating at scale, that question answers itself. Human plus machine collaboration. A very common use case that we're seeing in retail now is next best action, helping the associate based on all the incoming data feeds provide recommendations on what they should do next, freeing up some of the burden on the store management leadership, but also using data and real-time information to help guide and create a more efficient process that is also more rewarding for that store associate and results in a better customer experience as you're looking at, you know, is a store full of inventory? Is the food fresh? Are we generating a good customer experience for people coming in by being friendly and welcoming place to work? All right, so here we're going to talk one more set of use cases, and this is really around turning new profit streams from your data. And so what we have here is a flywheel. And what I would say is we're looking at the flywheel. Historically, you're really in the legacy and business retail. But underlying these operations in a store, what's another asset that we're not talking about? We're talking about massive amounts of data and customers. So what can you do with that? You can create new profit streams. We're seeing retailers do this, right? You see it with Kroger, you see it with Walmart, you see it with other organizations where they're creating things like retail network, insights businesses, data clean rooms, data services. You have Pearl Rock, which is a venture fund that is driven by data and invests in food investments coming out of 8451 in Kroger. So all of these capabilities where if you're able to take that underlying asset of data and customers and monetize it into newer high margin revenue streams, you're able to change the economic dynamics of the retailer. And what's the return? Margin growth and increased traffic into the store. So let's talk a little bit about retail media. I mean, retail media is one area that is, we can see it in the stores, and also if you're getting the number of calls that I am getting from different private equity groups that are looking in this space right now, it appears that there's a lot of interest in this across the market. What you're seeing is healthy margins compared with core retail. Very different, and that's part of the value of here. When you're activating data based on your analytics, you're going to see a very different kind of margin that plays back into and contributes to your legacy media than if you were to open another store and make that investment there. And the data, the analytics drive traffic and profit growth. But think about this way. If you have the data and analytics that help a brand understand the path to purchase for someone buying their product, and you provide them with a retail media network where they can activate against those insights, and then you have a closed loop that allows them to understand the effectiveness of those, you're creating a robust ecosystem that provides benefit to the customer, provides benefit to the store, and provides benefit to the brand and other stakeholders. So, and I think this is going to happen beyond retail, by the way. I was talking with CEO recently at a large media company, and you see the same thing in other industries where either you have a historic, unique data asset that maybe was hard to reach and get to because it was not transactional data, but it was unstructured data. Or you have a very specialized understanding of a customer segment, which some of you on this call that really specialize in different segments of the customer would have a very rich data asset that is monetizable beyond how you're typically using it within your industry today. From AI use cases to connected intelligence. So we're going to start to queue up a little bit about scale, but I think, the beauty here is that retailers have proven that AI creates measurable impact. From pricing, promotions, operations, media. The opportunity really isn't adding more pilots. It's about focusing on a connected ecosystem. Right? I gave the example, if you can do one use case like pricing, another use case like promotion, that's good. But what if you can start to create an ecosystem that optimizes across those solutions? Also, I gave you an example of scale. You can route things in a lot of different places. So build your algorithms in a way, and your sciences and your engineering and your operational processes that provide portability. But value scales when data decisions and execution are linked by a unified AI foundation. So what we're going to start talking about in a few minutes is, I've talked about use cases, value generation, but you can talk all about wanting to get the value. But if you build a house on a creaky foundation, it doesn't matter how much money you put into the tiles that you put, the woodwork. If the foundation's not there, the house isn't going to hold. And that's probably a good example to keep in mind as we talk about artificial intelligence. You do one use case, you feel good about it, you're not transforming your business. What do you need to do to transform your business? So we're going to cover that over the next few slides. So enabling AI at scale, transforming isolated use cases into connected enterprise advantage. So, we talked about the challenge. Easy to adopt a use case. A lot of people even say it's a pilot, it's an experiment. Those aren't bad, but if you can't get out of them, if there's no escape velocity, you're not going to see transformative value. The other thing, silos block scale, both in terms of data silos. We have to start thinking a little bit differently about how you organize data to make it available. The data example that I give is, if your connectivity is an interstate highway, each of your data domains should be operating off a common set of standards for building the on-ramps so that the data can flow, be trusted, be performant, be responsible as it's shared across organizations. So that's a data mesh discussion we won't get into here, but it's a mindset shift as well. The other one, in a lot of organizations, the biggest challenge here isn't the technology, it's organizational mindsets and behaviors. It's my data in operations, it's my data in merchandising, it's my data in supply chain. Shifting the mindset at the senior level and throughout, that is an enterprise monetizable asset to be shared and distributed for the benefit of the overall business, is actually probably one of the bigger blockers when we talk about silos. And the complexity of retail networks. And I mean, I can speak to this firsthand, multiple brands, right? Banners across organizations like Kroger. And, when we were working with Albertsons, same thing, multiple brands, different channels, different partners, some regional, some national. It's a very complicated environment that you all are working in every day. What I would say, though, is all that's great, but if you can't scale, you're going to fall behind. And what you see here is data. This is from, and I'll cite it, Carney, McKinsey, some of this data. I am also looking, I have access to financial data, and combining that, I'm doing my own analysis as well that's telling the same story. I'll publish that when I get the time to finish it. Remember, starting a new company, but that's kind of where we're at. But I have the data. This is valid. What you're seeing, and you can see it anecdotally. On the left, on my left, it'll be on your left. You have laggards. Those are companies that are just dipping their toe in. They're experimenting. Followers start to get some governance, a little bit of championing of AI use cases. The leaders, on the other hand, are companies that understand that data is a monetizable asset across their organization, and they value it accordingly. AI is not something that a chief data or chief AI officer is pushing. It's something they're enabling through the strategies of the business. So it's embedded in business strategies. The business leaders are driving the AI. They understand it as a tool. There's a level of what they call data literacy and AI awareness, but people understand how data and AI can impact and change their business. Those leaders are in general seeing higher profitability, greater shareholder returns in the public space. And the message, when I go back to that 70% of retailers are doing it, isn't it great? We're finished. No, the issue here is that those leaders are actually accelerating more because they've invested in scale. They're seeing a reduced unit cost, an increased time to market in their deployments. They are getting reusability across the AI and data components. They're building productized AI and data science that allows them to move faster and better. And they've got the education awareness, the job descriptions that hire in people that know how to use data, and they are accelerating. So this is not a story of velocity, it's a story of acceleration. But the beauty of this is, there's a way to move ahead. So, starting with, it's not just about the technology. And I think this is where we get in trouble. I told you earlier, I was talking to someone recently that in these chief data, chief AI officer, whatever you want to call them roles, the math is hard. The technology is hard. It's very advanced. But if you're doing it well, you're probably only spending about 30% of your time there. And 70% of your time is on the business and organizational. So strategic alignment. I have not seen a company fundamentally transform how they operate or materially benefit from artificial intelligence without the engagement of the CEO and the alignment of the C-suite. Bottoms up important. You got to attack on all fronts, but I haven't seen it work. If someone knows of a place where it's fundamentally transformed it without, tell me about it later. I'll go talk to them, but I haven't seen it work. And my experience has been that leadership messaging and alignment is absolutely essential. From what Rodney McMullen was telling me when I first got to Kroger, he's like, you've got to get from a point where you're pushing your way into where the business is pulling you, was absolutely essential. And I was thankful for his partnership in helping us get to that point. Or from when I was at Fidelity and we were starting and we had the top leaders in the firm learning about AI, and they're in the second row taking notes quietly, is Abigail Johnson, the chairman and owner of Fidelity. She didn't have to be there, but she sent a message to everyone that this was important to her. That alignment is critical. Business integration, different discussion, different day, but on how you do this. But if your technology and your analytic teams have not reduced the distance to the business that they're trying to impact, this doesn't work. Anything we're talking today only occurs when business intimacy meets technical capability. And how do you blend those teams using different approaches like Agile and other approaches, incentives, so that they are a single team operating towards a common vision? You'll get more innovation out of it too, as these people understand each other's capabilities. Unified data. No company has this totally that I've run across. Everyone's always in a state of improving data, but an idea that you are taking your most prioritized and critical data assets and you're making them available for reuse and exposing them to an increasingly scaled, componentized set of AI and data sciences creates that foundation. Think about this. I'll give you the highest level. And this hasn't changed since I was an undergrad, right? You have your data foundation, which fuels your technology foundation, which impacts the business process, right? That cake layer diagram. What we need to think about now is I have a data foundation, fuels the technology foundation, which activates a new layer of algorithmic infrastructure, which is embedded and working across the process architecture. That's what that unified data is really talking about. Governance and responsibility. I'm sure someone's eyes just rolled in the back of their head when you use the governance word. No one likes it, but I'm going to repackage it. I'm not going to talk about what's going on in the world and the fragmentation of regulations and what that means for business. But where I want to reset people around governance. Governance is the bridge between innovation and scale. Governance are the processes, the capabilities, the technologies that allow you to take that brilliant innovative idea and release it into the wild in a way that is performant, valuable, cost aware, and risk mitigated. So think of it as that bridge, and you think of it different. And finally, workforce change and enablement. This is highly disruptive to the workforce. So this is one about building new skill, but also what are your structured programs to educate and retool the organization? We talk about that. What we don't talk about enough is on each of these initiatives, are you fully and appropriately engaging the workforce that's going to be impacted by your AI? I have two instances that I wake up every now and then thinking about where we had what I would call an avoidable failure in AI. And that 95% number from that MIT study, I'm not questioning, I just haven't seen that. I've had much higher success rates, but where the failures have happened have been in two categories. One, the science just wasn't ready, and we learned that and we shut it down. The ones that were inexcusable was we worked with the senior leadership team around a business priority, built a science, didn't appropriately engage the workforce, and guess what? They had a vote. They didn't do it. They didn't participate. They sabotaged it. So how, from a ethical and a business perspective, are you engaging them to engage on to participate in the journey is going to be very important. Path to scale. Here's the good news. I had a discussion recently with a large leadership team for a large company, and we were talking about all these changes, and they were very early, multi-billion-dollar company, very early on their AI journey. You could see a little bit of the sweat, a little bit of the fear coming in. I think the good news here, it's not a revolution. It doesn't happen overnight. A journey of 1,000 miles starts with one step. I think that's a quote. If not, give me the right one in the text. That's what the text window is for. But what I would say is it starts with awareness. You just got to lean in. You got to start building awareness, educating yourself as leadership teams, working with your leaders to educate them, getting the technical teams created. Experimentation is always a start. You, one, learn along the journey, but two, you're also in a position where you're starting to build knowledge and capability and awareness and show some early wins. Once you get those early wins, though, this gap here that stands right now between experiment and expand is where a huge rift in have and have-nots happen. Yeah, we're doing this here, we're doing that there. I've seen examples of chatbots along the same customer experience, one that is fueling the responses from call center associates, and the other that is directly engaging through the digital channel with the customer. Built differently, not connected, different technologies, different answers. So that's the ability to expand in a way that scales and creates, just like you would an operation or you would a technology platform, is where you start to see value. And finally, and this was the biggest moment I think I had for me at Kroger, is every year we would go in, you'd go into the board a few times, but you kind of had the state of AI. It was usually in January. And the last year I was there, we didn't do it that way. It was pivoted. Each of the officers went in and they talked about their strategy and how AI was embedded. And I provided some color commentary. Then at the end, I came across and said, look, you got to build out the infrastructure to make sure this is affordable. And this is how we're going to engage vendors to make sure that they knew we were doing it in a way that still had some central efficiencies. But when it's integrated, I no longer owned it. It was in their strategy. They understood it. They were driving it. They were going with it. That was the major shift that I think organizations need to be working for. When your head of AI is no longer out on point, but they come second chair in those discussions, supporting, enabling, you're reaching a level of maturity that is really healthy for your organization. Let's talk a few minutes about the future, and then we'll open it up for questions. So go out 3 years, right? If we're in an environment, in a world where data is ubiquitous, analytics can activate that data, AI can activate it. We're seeing the cost of technology in the stores be able to drop some of and we'll talk about some of the limitations there. What could the world look like? So a few things. Unified. Online and store blend into a single experience. We've talked about this around multimodal, integrated, unified customer journeys. Haven't really done it. Do it on paper. But most organizations aren't really driving that in a way that I think reaches the full potential that we have them for. Not to say organizations aren't doing good things. There's a lot of good things. But one of the limitations for creating that seamless digital to store was the cost of the and the approaches, but the cost of the technology that you would want in the store to be able to help enable that. Well, one, we're starting to see a reduction. Like if you go out to San Jose, you go out to Silicon Valley, talk to the right VCs, and what you will start to see is a theme around attacking retail with an awareness and an understanding now that we're a low margin business, and therefore, if you're going to put things across 2,500 stores or thousands of stores or however big you are, you need to be able to drop the price of that technology. We're starting to see that. So the ability to have that same personalized journey I showed you on the digital channel earlier, but actually extend into the store is something we're going to start to see more and more of. Personalization redefined. We call this hyper personalization, but the ability here to move beyond recommend for you to full journey orchestration is going to start to happen. Where we're tailoring pricing, which still has some hurdles. Content, so that may or may not happen for other reasons. You can do it from a technology, but content and promotions into a shopper's intent. We will be able to get to a point where there is a deeper level of integration where we are scaling individualized messaging, individualized images, and some of this is happening. Individualized colors in the ad tailored to what increasingly refined cohorts and audiences look like. The intelligent store. If I have low-cost devices on the edge, I have ubiquitous data, I have the ability to activate analytics both in the cloud and at the store. Imagine a store that is able to sit and instead of having your top of the hour checks as you walk around the store and associates do those, you have a shelf alerting an associate that within the next hour, because of who's come into the store, that we're probably going to have a run on a certain item and be able to preemptively start the restock process. Be able to identify that there is a spill in an item and reallocate. Be able to predict that there's going to be a run on demand in a particular department, say it's e-commerce at a certain hour, and you have capacity in another part of the store, and you can reallocate. I know there's union questions there, but we're talking from a technology. That's the intelligent store. And then data is destiny. That asset that you have and the uniqueness to it, either based on who your audience is, based on the robustness of your data, operational customer, creates opportunities to think differently about your business model, bringing in new business models that potentially have higher margins to change the way in which you work. And that's going to happen across all industries. It's going to be especially important in lower margin industries like retail, where there's also an imperative to grab margin, capture margin. So we turn into an intelligent ecosystem. So that's 3 years out. We'll see where that's headed. So a few key takeaways. I want you to remember the AI opportunity is real. Retail is built for it. Transformation. To be able to truly transform, you got to get beyond the use cases. You have to start thinking as you're building out these capabilities. One, I don't want an AI strategy. I want a business strategy, and where within that business strategy can AI help accelerate it? And as a result, do I reprioritize my investment decisions? And two, you got to start to build, your technical teams have to start to think, well, if I'm building this capability, should I harden it because I think I can reuse it in other areas? Is this data asset, if I enrich it, going to be useful to others? And therefore, I should build it so that it can scale. Those are the kind of mindsets you want to get down in your technical team. And the final one, the path forward, it's evolutionary. Like if you haven't started, it's time to start. But the risk of waiting on the side and seeing how things play out, because everything's changing so quickly, I would encourage you to rethink the other risk, which is your competitors, the ones that are leading, are starting to accelerate away. And the longer you wait, the harder it makes it to catch up, the harder it makes it for you with your unique assets, with your ways of working, with your brand appeal to be able to catch up to them. So those who move first will lead, but it's time to start. So my contacts information's up there. If you want to reach out to me, ask me anything. Once again, it's AuroraInsightsLLC.com. That's because if you want to buy Aurora, it costs $2 million, and it's available though, but we made a different decision. So I'm going to try and exit out of this mode, and I'm going to see if there's any questions. I see one. And one, what I would say is, can a business achieve breakthrough results using only off-the-shelf solutions? I've been saying for a few years, and it was actually codified. I was on Gartner's advisory board a few years ago when I was at Kroger. And I had been telling people, and it made it in, I think, to their 2024 materials. I am a big believer that there is two AI races. One is the AI race that is the race to the next normal. That is where it's non-differentiating, but the quicker you can get there, the sooner you can improve your economic portfolio. And that is around, you're going to have all these solution providers, hyperscalers, embedding AI into their process to activate on your data. It's non-differentiating. Now, how you operationalize it can, but using those off-the-shelf solutions will create operational and cost advantages to those that use them. So the guidance there is get your data positioned, get oriented operationally to start taking advantage of those as quickly as possible. So yes, you can get breakthrough results in your speed to the new normal. Differentiation is different, which is the second AI race. And that's where you are competing. And here's the beauty of it. You're competing, in my opinion, on three factors. The robustness and the economic value of your unique data solution. So if you're a big company with high velocity, you're probably a little bit better than a startup, but not necessarily so. You may have a niche audience that's really unique based on your customer set. But you try and find what's unique about your data set. Two, your ability to use scientists. This is data scientists to be able to activate. Do you have data scientists in your network? Do you hire them? Can you use them? 3 years ago, getting those data scientists, I would have said, would have been the most important differentiator. I think it's the least important of the three things I'm talking about now. I think the data is harder, it's more unique, and it's a greater strategic moat. If you have unique data assets, you can increasingly find tools and other capabilities that are starting to make AI a little bit more accessible. And then the other component that is really important that we don't talk about is, if I have the data and the science, do I have the operational discipline and capability within my firm to act upon it more than my competitors? So what I would say, to answer your question, yeah, win the first race, move, get your data position, get your organization ready, and start using those off the shelf. The sooner you do that, the sooner you're going to see operational and economic benefits. Two, on the other one, what I would say is I think the opportunity is still there around differentiation. You just need to think a little bit about, because the factors that matter the most, when you set your mind to something as an organization, how good are you at implementing it? That's what I mean about operationalization. If you can do that today in your current environment, you'll be able to do it with AI. Your data, you can look at that, figure out where it's unique and advantageous to you. And if you don't have the data scientists there, and that's the root of your question, you can rent them, right? There's ways to get access to that. And there are also tools making that more accessible. Data science has been more accessible year over year through low-code, no-code solutions.
All right. So Todd, it's a great job. We got some more questions that came in. I believe you answered the question for the gentleman that put it there in the public section there. But we had some also on LinkedIn that came in.
Yeah.
Just wanted an answer. So how do you measure the role of, or the ROI of AI initiatives? What KPIs actually move the revenue needle?
I normalized. The most important one for me was EBITDA contribution, because it allowed you to normalize, be it a revenue or a cost reduction, the absolute value the organization is seeing from it, and to be able to have discussions around prioritization across divisions. So like my anchor, what was always whispering in my ear, sometimes coming at me head on in meetings, was around what is the EBITDA contribution from the sciences. But I would say, I'll get into a few AI specific measures. The other thing, don't lose track. This is a tool. The business measures are still paramount: operational, customer, and how are you moving and enabling them. but the real game is what you're doing, adding material value. Now, I also would look, and I would go back to my team and say, look, we're focused on business metrics, but the business expects us to be getting better, faster, cheaper. Yeah. So you start to look at unit cost of delivering AI solutions. You look at speed to market for AI solutions. That's not always easy to measure, but you look at throughput type capabilities. And you would start to measure some of the effectiveness measures of a technology and a data science organization as well.
Excellent. Well, we have some other questions, and we'll do our best to see what we can do to get through them. Well, what are 3 practical first steps for a CTO or head of data should take this quarter if they want to get AI projects into production?
First, you got to find a safe area to start that drives value and has a business sponsor. So you don't want to overextend on your first out of the gate. Both the organizations I've worked at on a large scale, marketing was usually a good place to start. I'm not saying it's the only, but there's generally a lot of data there and math aware workforce that wants to get better. So find a fertile ground to start, make sure you have the data to back it, and get started. 2, get your communication strategy aligned and start the discussion around what this could mean and what it could be, both for your team to get the buy-in, but also external articulation outside your group. You need to start early on getting the leadership team around what the potential could be. And a lot of that involves listening to them and understanding. The third thing that I would suggest is you go about doing this is you've got to figure out too from that was around communication around building. Never too early to have a story on what this means for your technical workforce and what it means for the business workforce. That'll be one of your biggest blocks if you don't get out in front of it. So feel free, if you want to talk about that more, feel free to hit me on LinkedIn and get a call. I'd be happy to talk about it.
Yeah, we're going to have some questions, Todd, that we may not be able to get to at the time allowed, but we'll make sure those people get in touch with you offline to do that. Let's sneak in one more question. It should be something we could do in a short period of time. What is one tool or capability should retailers invest in this coming year?
That's a good one. Here's what I would say for this call. I'm going to answer it 2 ways. 1, got to look at where you're at. If I were to say looking for value in a retailer and you haven't done these, and I look at EBITDA contribution potential, price and promotion, that's hard, better have good scientists. Operations efficiency would be the next one, because low margins, if you're able to do something like those 2 examples I had in the story, you go right to the bottom line. So that's from a science. What I would say an area of lift that I found was relatively technical teams, getting them on generative AI tools and measuring it. There's no excuse for saying the volume or the value escapes. You have technical people who know math. You can measure this and track the efficiencies of using those tools. I found I was able to take about a 14% reduction in my growth projections through the use of those tools. And that's after you normalize out lunchtime, meetings, all that, the true coding time. We didn't miss a beat. And the beauty of that is you keep your existing quality processes in line. So everyone says, how do I de-risk the AI? Well, the AI use sits within your existing software development quality processes. So it should be, if your processes are good, I'll believe in the outcome. If I trust the process, you should be able to get some efficiencies with relatively low risk.
Excellent. Todd, this has been a wonderful session, very informative, a lot of great insights. You generated a lot of questions. For the people that did submit questions on LinkedIn, we will make sure that Todd does get to them, and we'll address those online on LinkedIn. We'll make sure that we'll address those. And if you, again, want to carry on that conversation, I encourage everyone to reach out to Todd as well here, on LinkedIn, or what Todd gave you in terms of the contact information here. And again, we can't thank you enough, Todd, for this very informative webinar today.
Hey, really appreciate it. Appreciate the your work today, everyone on the call. Zoolatech has been fantastic, and I also say I really enjoyed talking with your founder. Exciting to grow my network through this process.
Excellent. And we highly encourage everyone, if you got value today, reach out to Zoolatech, let them know in terms of the value that you received from Todd today, and do the same for Todd as well. Connect with him on LinkedIn. And again, we will make sure to address those questions. And if there's any feedback that you could provide us for a future webinar and what could work even better that will help move you forward, please let us know here with Zoolatech. And again, it was a pleasure to serve you all of you today, and we'll see you on the next webinar. Take care.